And I always look for some kind of outlandish asset recommendations in 2023. For example, the bond market that I chose was US dollar denominated Ukrainian government debt, where you're getting a fantastic yield above 30% in dollars, and the idea being that Western countries wouldn't allow Ukraine to default.
Die Geldmeisterin. Der Finanzpodcast mit Julia Kistner.
Yes, hello, my name is Paul Jackson. I am the Global Head of Asset Allocation Research at Invesco.
How would you briefly explain what happened 23 on the markets?
Yeah, basically the idea is that at the beginning of each year, literally the first thing I publish are my 10 surprises for the year ahead. They're not necessarily my central scenario, but there are things that might be a bit out of the ordinary, trying to think about, okay, some things that might happen, but yeah, maybe there is a possibility that it happens. It's not a central scenario, but that if it does happen, it could have an important impact on asset markets. And I always look for some kind of outlandish asset recommendations in 2023. For example, the bond market that I chose was US dollar denominated Ukrainian government debt, where you're getting a fantastic yield above 30% in dollars, and the idea being that Western countries wouldn't allow Ukraine to default. And from a stock market perspective, I always look for really cheap stock markets where ideally the dividend yield is higher than the PE ratio. And usually when that is the case, it's either going to be a disaster or it's actually going to be something very good. It's a great buying opportunity.
So you were looking at Argentina?
Oh, no. At the beginning of this year, I chose Pakistan, which was not on most people's radar at the time. Argentina right now, I think you probably have to be quite brave to, even before the elections, I think you had to be quite brave given the economic circumstances in Argentina. But now with the election of a new president who is promising to make some radical changes, including getting rid of the central bank and basically introducing the US dollar as the currency in Argentina, it's not at all clear to me how that works out.
Mm-hmm. Right now we have November. Was there something which surprised you in 2023, except of course the global crisis, the political crisis?
Yeah, I mean, there are always things that surprise me literally every day. I'm surprised by things, but I think obviously in a slowing economy, you would normally expect cyclical assets to struggle. Whereas this year, we have seen high yield do well, with spreads narrowing, which is a bit of a surprise. We have seen equities do quite well. Some of that is idiosyncratic. It's nothing to do with the economic cycle. It's artificial intelligence, which has boosted a certain number of stocks in the US market, which has boosted the S&P 500, which has boosted global indices. But in a world where bond yields have been rising, to see growth stocks doing so well really has been a surprise.
Mm-hmm. That's my overall impression is that it wasn't that bad as it appears to be. Would you agree with me, and why and how come?
Well, I think it's what I would say is that it's not as bad as I would have thought it should be. But when you look at the numbers, in terms of returns on assets, the numbers globally look okay. To the end of October, annualized return on equities of 10% is actually pretty good. But actually, it is a very it's a very divergent situation. If you look in the US market, for example, obviously the performance has been driven by stocks that are enabling artificial intelligence. Whereas if you go outside of those, what they call the Magnificent Seven, there has really been no gain in the market. If you look elsewhere, Chinese stocks have really not done very well at all. Japanese stocks have done very well. But it is not as good as it appears because I think a lot of that has been driven by the weakening of the yen. And when you measure Japanese stock performance in US dollars, for example, the performance is similar to what we've seen in Europe.
And have you been surprised by the banking crisis in the US?
Well, first of all, we should never be surprised that there are problems in the financial system in the US. If there is a financial crisis anywhere in the world, very often it is the US. The regulation of the financial system in the US is not great. There was a rapid change in monetary policy settings. So banks, along with other institutions and businesses, had been encouraged to take on risk because interest rates had been so low for so long. And banks, insurance companies were basically regulated to behave as though government bonds carried no risk. So when you then find that government bond yields have risen rapidly and some institutions are having problems as a result of that, we shouldn't necessarily be surprised. There are always unintended consequences of central bank tightening, but I don't think anybody was really looking specifically that the problem was going to reveal itself in regional banks. But remember that 5 or 6 months before that in the UK, we had a big problem with the pension industry because of a foolish budget that was launched by Liz Truss and Kwasi Kwarteng, and that caused a lot of volatility. It caused a lot of problems for pension funds, and luckily we got through that. But in the US, with the regional banking crisis, luckily the Federal Reserve, the regulators, the government, they all reacted very quickly, and the problem became contained. And so they stopped it becoming a bigger problem than it was in the end. So yes, the volatility didn't last for very long.
The problem did have the Swiss banks then.
Well, that was one specific Swiss bank, but to be fair, that was not the same problem, and it was something that had been building up over really since the financial crisis. It had been building up, and it was just simmering away in the background. It had then knock-on effects because of the way that the Swiss authorities dealt with AT1s, the way that they dealt with the balance sheet structure or the ranking of different investors in different parts of the balance sheet. That caused disturbance in the AT1 market because the Swiss authorities decided to do something which it was understood would never happen. And so investors in the equity of that bank got rewarded before the investors in these bonds, and that should not have been the way that it worked. But anyway, regulators elsewhere in Europe came out very quickly and said, no, that's not the way that we will do it.
And what was really interesting in your speech and the one of your colleagues is that you're so bullish for real estate. We didn't see a bubble yet, at least not in Europe. Don't you think that we are not at the end of the cycle right now, that you should wait for investing in real estate right now?
I think there are two things. You have to separate one's views about the condition of the real estate market, which I don't think either of us were saying was very positive, that the real estate market does have problems. But the other question is, what is the price that we're paying for those assets? And the price that we're paying for those assets has come down quite a lot. And as I showed, the return on REITs globally has been sizably negative in the last 2 years. And that, I think, has created a situation where the price is interesting. There is a price for everything. Low quality assets should have a lower price than high quality assets. But I have the feeling that the price that we're now paying for real estate assets in most places around the world is at a point where we can look forward to decent returns, even if the fundamentals are still haven't worked themselves out, and that the fundamentals might still be decaying for a little while.
What was also interesting was that you are looking for cyclical equities. Why do you think they are interesting?
I would say in the very short term, maybe not so much, but looking all the way through to the end of 2024, if we think that the global economy is going to start turning up, so we're going to start having better growth rather than less growth, which I imagine in the very short term, when we're looking that far ahead and we're looking for better growth, stock markets start to discount that, and so cyclical assets would normally perform ahead of the upturn. You get better performance in cyclical assets, including cyclical equities. And also, don't forget, this time, interest rates are much higher than they've been for some time. So companies that are, let's say, lower quality, that have got a lot of debt, they've been put under pressure because of those higher interest rates. As those interest rates come down, the pressure gets relieved. Mm-hmm. And so they actually get a lot of benefit from the upturn in the economy, but also the relief that the interest payments that they're making are lower than they were. And it's essentially the idea that you buy the assets that have been struggling the most. The lower quality ones. We kind of joke about it and call it the dash for trash, but so I think those sorts of assets have the most to gain as the economy starts to recover.
So we are already in the forecast for 2024. Why are you so sure that the interest rates will come down already in the second quarter?
I mean, we can always argue about the timing, but I think with inflation having come down so much, remember, interest rates have gone up a lot because inflation was high. Well, inflation is, in the US, a third of what it was, and it's come down a lot in Europe. So I think central banks no longer need to keep a sort of put the screws on their economies. They can start to loosen that grip. But what will persuade them to do that is the fact that economies are slowing, that unemployment is starting to rise, and as they see that weakening in economies coming through, they should normally start to think that, well, inflation will fall even further.
The Fed, in contrast to the Eurozone, has also to look for the employment. They also put the interest rates high to lower the labor costs. So this is not anymore necessary next year?
Well, first of all, unemployment has risen in the US. It's gone up from, I think, a low of 3.4% to 3.9%. So you've had already an upward movement in unemployment. But even before that happened, wage growth was coming down, which is kind of unusual. Usually there's the Phillips curve effect. That when unemployment goes up, wage growth comes down. And I think we will see that. But the reason why wage growth has come down without the rise in unemployment was because wage growth went abnormally high in the recovery from the pandemic, because in some sectors companies couldn't find enough workers. Things such as leisure, the hospitality industry. Nobody wanted to work in those industries when we were in the midst of the pandemic. And so wages went up in those sectors, which pushed up wage growth in.
So this is really just sectors. A temporary problem, not a long one.
I think that was a temporary problem, and we've seen that in the US that wage growth has come down. It's kind of normalized, and as unemployment goes up, as sure as night follows day, wage growth will come down even more.
And what about the oil prices? Couldn't they affect also the inflation negatively?
For sure, but they can impact it in both directions.
Okay.
When the oil price rises, yes, it has an important impact on headline inflation, particularly in the US, because the taxation on gasoline, the petrol pump prices, the taxation is very low. So there is an immediate pass-through of oil price increases, and it's a big impact on inflation in the US. But you get the same sort of effect in Europe. But we've seen that. We've had that in the last year or two, and I suspect with in the short term, weakening global economy. With oil and gas prices being higher than I think they should be anyway, I think they're abnormally high, I suspect that there will still be some downtrend in energy prices, which will help pull inflation lower. But for sure, if we have a big conflict in the Middle East, if oil supply gets cut, the oil price goes up, that will have an immediate impact on an upward effect on inflation.
Where you're also a little bit a contrarian is China. Could you explain why do you think that China is so cheap and really interesting for equity investors?
Well, first of all, I'm from Yorkshire. So as a Yorkshireman, number one, I'm usually pessimistic. And number two, I like to be contrarian. I don't like to be part of the crowd. So on the China, and that's why I think it's in my nature to put a lot of emphasis on valuations. My belief is that the biggest impact on the return on my portfolio is not what I think is going to happen to the world, because I can be right, I can be wrong. The most important impact is the price that I pay for assets when I put them into the portfolio. And so that means I pay a lot of attention to valuations, and at the moment the valuation of Chinese equities is low. They are as cheap as they have ever been, as far back as I can measure, certainly much cheaper than US or Indian equities. And because Chinese equities have been suffering for the last few years, and it's a little bit like real estate around the world, because they've been suffering for the last few years, it creates that valuation opportunity. And when an asset is falling, nobody wants to buy it. It's very hard to convince yourself psychologically to buy an asset that is falling. Whereas when the price is going up, it's you feel very confident. It's going to, and all of the reasons for being positive suddenly seem much more credible when the price has been rising.
But do you think that the equities in China the prices are transparent? You never know what you get, or?
I'm not sure it's any different to the situation you have, say, in the US or in Europe. You're at the you are at the I would say not the beck and the call, but at the whim of the people who prepare the accounts. We see accounting scandals in the US, Enron, for example. We've seen financial crises in the US. The whole global financial crisis started in the States. We had the regional banking crisis, the savings and loans crisis. But because we know much less about China, people are automatically suspicious without looking into it. And so, I think you have to do the homework, but just in the same way that you have to do the homework for European companies or for US companies.
And you see value everywhere in the emerging markets, or do you have any areas, Asian Pacific or Mexico or whatever, where you see better chances?
Well, I think China stands out as a big market. So if you're looking for a big market that is good value, then China is there. India is the other extreme. Everybody loves India at the moment.
Too expensive.
It's great. It's great economic performance, but economic performance doesn't necessarily translate into stock market performance, and I think it's too expensive. Latin American markets in general are cheap, pretty good value. Asian economies and markets, I think, are that they have a chance of, they're probably going to be more dynamic, so they're maybe more interesting from that perspective. But if you're looking for value, then China's an obvious place. I mentioned Pakistan at the beginning, which is a very kind of frontier market, but Latin American markets, maybe outside of Argentina, Latin American markets, that there is some interesting value opportunities there.
You also said that the bonds will outperform equities. Could you explain this just?
Well, the point was that, the point that I was making there was that in an environment where yield curves are steepening, across the world, historically, when yield curves steepen, government bonds have tended to outperform equities. Now, whether that happens or not this time, I think that because bond yields are pretty high, much higher than we've seen for maybe 10, 15 years, I think we've got a good chance of getting decent returns in 2024. We may get similar or maybe slightly better returns on equities, but with much more volatility. So when you look at it on a risk-reward basis, I think that bonds maybe have got the advantage over equities.
And regarding Europe and USA, you prefer Europe. Why?
When I'm doing my allocations, I'm looking at it on a market capitalization weighted basis. So if I'm looking at the US effectively, I'm looking at a broad index like the S&P 500, where the valuations are pretty extended. But if you strip out the highly valued companies, that there's a lot of companies in the US that are not expensive. So if you look at it on a equally weighted basis, it's a different situation, and you can buy indices that are equally weighted. Or if you focus on size, the size factor, so buying small caps, or if you focus on value companies, I think you can get good access. But if you're looking at it in terms of broad indices, then Europe is not as expensive, and it has a bigger concentration in value than the broad indices in the US. The US is much more focused on growth. And I think for 2024, even though with bond yields coming down, growth would normally benefit from that, I think the relief that is going to come to lower quality companies because yields start to fall and interest rates come down, then I think that sort of value part of the market will benefit. So I think Europe has got more of those sorts of companies.
Okay, because it doesn't have so much tech and growth.
Yeah.
Why are you so sure that the Fed goes from 5.5 to 4% at the end of the year? Is it the election? Or?
No, it's not the election. It is just historically the Fed, once it starts to cut rates, goes very quickly. So what I'm suggesting is actually less of a reduction than it has done on average over recent interest rate cycles. So I'm more aggressive than the market, but less aggressive than the Fed has been historically. So it sounds a very aggressive forecast at the moment, and the Fed is saying higher for longer. But I think it's very easy for the Fed to be brave about what it's going to do while unemployment is still relatively low. As unemployment continues to rise, then I think the Fed will be less brave and will start to then cut interest rates. So I would say I'm not, it's one of those forecasts where I'm not massively confident, but I think there is a good chance that will happen.
You said you have the cash on zero,
Yeah.
but what is if there's happening something unforecasted? You need some cash in.
Yeah, I've been holding cash for quite a while.
Yeah.
So I've been kind of keeping it in reserve. Now I think that other assets are priced attractively enough, especially in fixed income. So the protection that I will have where I'm seeking protection is, I've got government bonds higher than I've had for some time. I'm still a bit underweight, but investment grade credit, which tends to be quite a defensive asset.
What about bank loans you were preferring? Why? Because the banks have better balance sheets, or why do you think?
Oh no, it's nothing to do with the banks themselves.
Yeah.
Basically, bank loans are it's an asset class where the banks have given loans to companies, and the banks then sell those loans off to somebody else. So it's like a securitization process. So you buy the bank loans, but you're not investing in the banks. And those bank loans, the yield on those bank loans is actually quite attractive at the moment.
To buy low, sell high, you said it's quite difficult, but to summarize, where is it possible to next year?
China.
China, okay.
But Chinese equities, not Chinese bonds.
Because they have too much debt? Or?
No, it's because the yields are already low. So because the Central Bank of China has been reducing interest rates, Chinese bonds have been doing very well. Bond yields are very low, so in a price sense, you're buying high. If you're buying Chinese bonds, Chinese equities, you're buying low.
And in some bonds, it's also possible, you think?
Yeah. With bond yields as high as they are, that is the equivalent of buying low.
Thank you, Mr. Jackson. It was a pleasure.
Thank you very much.
Alles Gesagte ist nur die persönliche Meinung von Julia Kistner und daher keine Anlageempfehlung und keine Rechts- und Steuerberatung. Für Verluste, die aufgrund von getroffenen Aussagen entstehen, übernimmt die Autorin Julia Kistner keine Haftung.